Hello, everybody, and welcome to the 6.5 podcast, live webcast, TV cast, and now on all your streaming networks cast, talking all things tech. I'm Daniel Newman, your host today, joined by my always esteemed Moor Insights Strategy principal analyst, Patrick Moorhead. Patrick, welcome to Wednesday, November 25th, 2020, to our both live and on-demand podcast right ahead of the Thanksgiving holiday. How you doing, buddy?
Doing great. You know, the office is kind of sparse today. I've noticed I've had a few clients cancel meetings, which is just fine because it gives us time to come and riff and do podcasts and have some fun. And here we are having fun.
Yeah, I love that. I do love that right ahead of the holiday, you do get a little schedule reprieve. I have had an insane schedule, and there's a crazy wave of tech events coming up right after the holidays. This is kind of like a calm before the storm. And so I'm happy to be able to share this. I hope everybody out there that's watching live is able to tune in. Hopefully you got a lighter schedule so you can listen in. This week was modestly, Pat, more in control, more news-wise, manageable for us. But it still had quite a bit going on. So let me do the quick rundown for everybody. The 6.5 podcast is, it's an analysis-focused podcast. The typical format is 6 topics, about 5 minutes each, deep analysis, very little news. Today, we're going to be a little off that script because the lighter week, we're going to have 5 topics for 5 minutes each, and we'll give everybody a little bit of time back. We promise you we did. We scoured the net and decided there just wasn't another topic that we felt we'd give a lot of value to. So we're not going to do that. We're going to give everybody their time. But there were some big items this week. It was another fairly heavy earnings week, Pat, because of that's just where it fell. And we're in that season right now. And there's another acquisition piece. And by the way, there's a bunch of big tech items coming up. We want to share it with everybody, let them know what to be looking forward to. Quick disclaimer. This show is for information and entertainment purposes only. And while we will be talking about publicly traded companies and be talking about performances related to, say, earnings, we are not providing investment advice. And in fact, if I say it, do the opposite. Just kidding. Don't do anything. And I hope you find this informative and educational, but not stock or advice for finance in any way whatsoever. Hey, Pat, speaking of this, let's jump right into topic number 1. So yesterday were 3 earnings results. One of them that kicked off the week was Pure Storage. I'll let you run this one.
Yeah, thanks, Daniel. So first off, Pure a few weeks back revised their numbers up. So we had a pretty good idea what they were going to come in with. So it really wasn't much of a surprise. A couple of my big takeaways is that, first of all, if I look at a 6-month period, there were only 2 vendors that saw storage growth in the entire industry, which is kind of shocking, but not shocking given the challenge in the enterprise and government data centers. So the revenue was off 4%, but everybody's getting hammered in infrastructure, so I'm not concerned. Customers were flat, which I thought was the only, I would say, negative sign. Gross margin 69%, which is completely eye-popping. But again, we're not financial analysts or day traders. So we are really looking at these for more insights. And I did get a couple things out of the call. Portworx, they said the sales were ahead of schedule on that integration. They didn't give any data that said exactly what the expectations were, but I take Charlie and the team on their word. The other thing, and it's funny, Pure loves to introduce new services during earnings. And, a lot of recently public companies will do this. And they came up with an expansion of Pure as a service. And essentially, you can cut by block, you can cut by object. You have 6 tiers with different performance, commitment. It is exactly what you want. And I have to tell you, this is the way storage as a service should be done, and I think it really exemplifies that the company is focused on CX, customer experience, in a very similar way that they do their software. And I know software is not the same as services, but I feel like you've got to have a CX software angle to be good at a CX SaaS or IaaS type of service. And anyways, we'll see how it goes. I think they're going to do. I think they're going to do well with this.
Yeah, Pat, I've been pretty forward in my past commentary about Pure Storage that I admire the company's attention to CX. I admire the fact that it has differentiated itself on Net Promoter Score and being one of the easiest companies to do business with in storage. I admire the fact that the company is trying to differentiate a category that can be somewhat service intensive and not always at the highest satisfactory rates. I remain a little bit challenged by the company trying to be specialized in an era as all the converging systems are coming together more and more as part of, compute, storage, networking, edge, everything that people are looking for is being a niche going to work. And the real challenge that came up for me, Pat, in these earnings were the losses that are mounting. At some point, Pure Storage has to get profitable. The losses were 3 times roughly the losses from a year before. Now, again, tough year. So I give every company some wiggle room there. But my big worry, Pat, is this isn't necessarily a hyper growth business, right? This isn't a hyperscale cloud or SaaS offering at scale in the sense of like ERP or CRM or collab, where you have the chance to take on millions of users in a quarter with the right conditions. And so where's the growth going to come from to turn the corner for Pure Storage? So like I said, the service, the delivery, the offering, the customer focus, a lot of good things, Pat. But I mean, and maybe you have some thoughts on this before we wrap up this segment, but my one big concern is if this company is going to really rise going forward, at some point, profitability has to be part of its story.
Yeah, Daniel, there is no debate on the profit portion, but as we've seen, I mean, how many years was it that Amazon lost money before it made money? Look at Tesla. How many years did Tesla lose money, right? As to the getting broader in offerings, I do see, the good news is I do see Pure Storage doing it, whether it's a Kubernetes, whether it's converged infrastructure with partners. You might notice they do a bunch with NVIDIA for converged infrastructure, and they're doing more with networking partners as well. But good thoughts, good analysis, and those are my adders. Thanks for that opportunity, Daniel.
Hey, no worries. I want to punt it back. I mean, you and I tend to agree on most things. I think we both like the company. But I think in fairness, these are just questions that need to be asked. So let's move on to the second topic. And by the way, I did have a 6th topic just pop up, Pat, that I'm going to tease you with at the end of this. Literally, as I'm speaking, I got a text that's like, whoa, you're going to like this. But everybody, you're going to have to hang on till the end if you want to hear what the unknown topic of this show is going to be. Let's talk about Splunk. I've covered them a few times in recent Their conf event was really, really big this year. CEO Doug Merritt, who also keynoted, by the way, so did Charlie Giancarlo from Pure, our 6.5 Summit, which will be back next year. But Splunk had a big quarter. Companies continuing to grow, observability, machine learning, data to everything is becoming a big thing. And the company's quietly snagging a bunch of acquisitions, and to announced another one this week that it's acquiring a company called Flowmill. And this is another observability suite for network performance management. So there's basically observability of applications, and there's observability of the network. And these are both growing areas, and Splunk has a really, really strong play in the network space. And so this move, albeit a small player, small competitor, really is going to add some new capabilities to the company. And one of the big things about it is that Flowmill leverages something in its observability suite called Extended Berkeley Packet Filter, or eBPF technologies. And this is basically what Splunk sees as an underutilized value data source, and it's a differentiator. And so the company is in a lot of ways looking at this eBPF capability as what's going to help take the Splunk platform to the next generation or next level of its observability capabilities and suite. Look, the real analysis here is that Splunk's a growing company in a growing categories. We have more and more items connected to the network. The need for businesses to not only have application management and tools that allow for us to see what's going on in our networks, but also to have tools that add ML and automation and patching so that systems continue to run and have and use the best practices in terms of visibility of the data. This is going to become a big spend for enterprise, Pat. So Splunk's kind of quietly just carrying on. And trust me, in the last year, I've heard the name more and more. I still think a lot of people don't know what Splunk does. But when it comes to IT operations and security operations and the utilization of data to observe the health and wellness of a company's IT environment, Splunk's really pulling itself apart. And just one more acquisition. And I mean, the company's made a bunch. It acquired a company called Plumber. It acquired, what was the other one? Oh gosh. It's got Signal FX. Sorry, that was the big one last year. So it's been making these kind of series of small but really material acquisitions that are helping grow the suite. So real encouraging stuff in this space, Pat. And I think we're going to be hearing more and more about it. By the way, IBM acquired a company just a week ago called Instana. It's in the same space of observability. So you're hearing more and more, whether it's ServiceNow, whether it's IBM, Splunk. This category is heating up. Acquisitions are coming in strong. And I'm bullish that this category, with the growth of data, is going to continue to grow.
Yeah, the only thing I'll add to that, for those people who aren't familiar with observability, here's my take. So everybody's going for the autonomous data center, and that's pretty much everything happening on its own. And the baby step to get there, one of the prerequisites is that you have to have automation. And the only way you can have automation is through observability, knowing what the heck is going on so you can actually automate cases, either using machine learning or humans. My son-in-law my nephew got his job at a top insurance company because he was a Splunk expert, but it was him who was the observer. It was, you imagine the matrix data coming down in your screen. He could tell you what was going on, and that made him just the guru in security. But that is not the future. The future is automation, and that is why you need observability, because you have to know what the heck's going on with your network. You have to know what's going on with your applications, going on with your data, pretty much everything. So anyways, yeah, I'm probably preaching to the choir here, but if you didn't know why observability matters, that's my 2 cents.
I think just to your point about your family member, it's kind of like, remember when the CCNA and the CCIE were huge, and they're still big, but what I'm saying is it was like a guaranteed. I think having this skill set is going to be like a guaranteed placement in this whole data analysis world and data science world that's growing and proliferating so quickly. All right, couple earnings calls here, Pat. Let's kick off to Dell yesterday. Big announcement, big quarter. I'll let you go first on this one. I'll take the next one.
Yeah, all in all, I mean, the company did well. And I think it's a testament to their diversification. They have PCs, they have infrastructure, and they have VMware. And whether you want to look at VMware as a software play or a cloud play or a quasi, that they really are a quasi. Most of the revenue comes from software, but they're, as the rest of the industry, moving to everything as a service. I mean, listen, the PC group crushed it, 8% revenue increase. They made $1 billion in op inc. And I know everybody loves to drag on PCs as being old and unprofitable and horrible, but listen to that. They made $1 billion in op inc. And R&D and SG&A isn't massive, so they pull a tremendous amount of that to the bottom line for cash. The interesting thing about PCs were that both consumer and commercial were up, and I need to go I need to get underneath this, but HP Inc. was actually down in commercial, which was interesting, but Dell was up. Their dates don't exactly match, so I'm trying to figure out what happened here. Infrastructure was down 4%. Again, not surprised. IT has pulled back, and they've shifted expense to IaaS, PaaS, and SaaS, which makes sense. It's hard to even install infrastructure equipment. We saw this with Cisco. Not surprised. Lenovo did grow, but Lenovo, their infrastructure, they're heavily weighted to the public cloud, right? Where Dell and Cisco, and for that matter, HPE are not. Finally, VMware was up 8%. You know, they had a lot of triple-digit, double-digit discussions on product lines with that I really like, but I know this is easy for me to say, but I think people want to see double digits out of VMware, right? As a growth play.
Yeah, I think you caught a lot of that there, Pat. I mean, look, Dell is a big, broad, diversified company that touches a lot of things. What I was looking for this quarter was growth year over year. Last quarter, the company was within a couple of percent. I said the big bellwether turning point moment for the company would be, can it return to growth? And it did that by a couple of points this quarter, overall revenue. The powerhouse of this quarter, without a doubt, has been client computing or PC. We saw it with the chip makers first. AMD's huge numbers. It was the strongest part of Intel's number this last quarter. You saw Lenovo had great numbers, Dell, and then in a moment, I'll share a little bit, like you said, about HP, all really good numbers. And in the case of Dell, it was revenue-wise a record breaker for the company. VMware is like a steady Eddie. It's been like 10% every quarter. This was 8%. It's the strength of hybrid cloud, because even though the infrastructure deployments have slowed, companies are tying their on-prem infrastructure to the cloud, and VMware is one of the key capability enablers of this hybrid movement that we have going on. Probably my biggest alarmist moment with Dell is just what it's doing with its ISG business. That business has just not been able to recoup. And for the reasons I mentioned, it's pandemic driven, its on-prem spending has declined. You are seeing more subscription. You're also seeing a pivot. The company talked about its Project Apex, which is its big as a service movement. We are seeing a pivot to more and more even on-prem spend being delivered, deployed, and packaged like a cloud offering, whether that's AWS doing Outposts, which kind of started that movement. But then you have HPE doing GreenLake. You have Lenovo TrueScale. You've got Dell now. What it was calling Dell Tech on Demand is now called Project Apex. Cisco announced a pretty significant effort to move into this space. So that might have an impact short term to revenue, but in the long term, it's going to be very good for Dell. So just something to kind of keep an eye on there. Last thing I'll say is the cash flow created was good. I think it was over $4 billion in debt paid off. And it's actually getting the company closer in ratio to some of what they would call investable grade. And that's going to improve the company. I'm still really watching that 13D filing and the spinoff of VMware. The company said nothing about it, but that's something I've got my eyes on very, very closely in the future quarters, because so much value for the company and shareholders will be unpacked after a decision is made with what the company is going to do with VMware. So speaking of record-breaking quarters, Pat, can we move on to HP?
Let's do that.
All right, buddy. So HP also earnings yesterday, and the company was able to announce a 19 million unit quarter for its PC business, record breaker. Also a record breaker for its print unit with 12 million units. So, and Pat, you said this under Dell, but this was a really big thing, driven by the consumer. So what's my take on that? Well, essentially, here's what I think kind of happened is, early in the pandemic, the enterprises made big waves of purchases for PCs to get remote workers at home, basically pulling on all the demand, completely bottling up the supply chain, stressing all the chip makers, just trying to meet demand. And now what's starting to happen is you're starting to, I think, see a wave. And the next wave is now consumers, as the economy is improving, as some cash flow in the home is improving. People have realized their dependence on the PC. HP has a slogan they call the PC is essential. And PCs are becoming more and more essential. And as the prices continue to go down, as the product quality continues to go up, people are wanting to refresh their PCs. And whether that's for their kids and the students in the house, whether that's to make sure that they're always connected for productivity. And of course, with streaming and gaming, we're doing more and more of our entertainment on our PCs instead of on televisions and whatnot. So I think all these things are really driving the business forward. A couple of just side notes about the company as a whole. I was really encouraged by the bullish forecast that the company put forward. It had a forecast well above guidance for next quarter, but it also had a big increase. It increased its div by 10% going forward, which was a pretty big, bold move given the circumstances right now as well, Pat. So you had strong guidance, you have an increase in the div, and you have basically a record-breaking quarter for a company that kind of fits in a market where people have said, oh, the PC's dead. Well, guess what, everyone? The PC is far from dead, as is the printer business, because apparently people are spending money on printing. And based on the several requests I've gotten for shipping labels to be printed by my daughters and wife today, apparently printing is still very in vogue in the Amazon era. So that's what I got on HP. What do you think, Pat?
Yeah, so you left me a little bit, which I didn't leave you much on Dell, but you found a way to make something of it. Yeah, the consumer printing up and commercial printing down made a ton of sense to me. The challenge, though, is that the expense and the margin structure for commercial printing is better than consumer printing. Now, HP is in a multi-year effort to equalize that a little, particularly when it comes to the price of the printer and the price of ink, because a lot of people have come along and typically out of Asia to make fake ink that goes out in there that isn't environmentally sound or friendly, but it's cheap, and some people want cheap. I was really happy to see the big gains in gaming, premium, and accessories. Those are areas where you have to make money, and I think their level of profitability reflected that. The good news is that printers weren't off a cliff. I mean, it's been a tough tough road to hoe in printing, because if you remember, just back a few years, I mean, printers were where a lot of the money was made, and there's still a lot of the operating profit. Just to show you comparison, 713 million this quarter for print, and PCs were 528 million, including accessories. So printing still is bringing in the op ink, just not as much as there had been.
Yeah, absolutely, Pat. And that's those are some good ads. So let me throw a little softball curveball into here. So got a message from a reporter that the Wall Street Journal is now reporting, Pat, on Salesforce is in some level of significant talks with a company called Slack to acquire Slack. And so I was asked for some commentary. And by the way, I predicted this possible acquisition in a number of different pieces I wrote earlier in the year, and some comments I'd given to Business Insider. And it looks like there's a possibility that this acquisition is going to come to fruition. Now, it's early days. Haven't even had a chance to really dig into it. But since we had an empty topic, Pat, and this just came in, it's like, holy wow, this is perfect. So just a little bit of analysis on it. Slack was on a road to nowhere. I'm telling you, the company had a really great technology and has a very loyal fan base, and people that use Slack like Slack. But the problem is the ecosystem for collaboration had grown and scaled too well beyond the need for the connectivity and the tie-ins that make collab work. Can't be done in a bespoke manner necessarily. Zoom had the benefit of this, probably saw exponential growth as a byproduct of the pandemic, and may not have been able to grow at nearly the scale as it's sort of being an appliance itself. But because of what happened in the pandemic, it benefited. Slack did not see that same benefit. It did not see that same growth and that adoption. The growth and adoption instead went to Microsoft Teams and to an extent to Cisco Webex and companies that basically had that full end-to-end stack. Well, Salesforce has flirted in the collaboration space. They've had what's called like Salesforce Chatter. the full platform. It's an ecosystem. Companies use Salesforce as sort of the central repository for a lot of their day-to-day activities. And so with Salesforce and with the weight of Salesforce, and like I said, I love to, be a little critical at times of Salesforce, but this could give a kind of a revival to a company like Slack because you have the benefit of the whole Salesforce user ecosystem. So again, it's early days and it's early moments, but for a company like Slack, I think growth was going to get harder and harder. Profitability was further and further out of reach for the company. The street had grown increasingly impatient. The stock was really not even a discussion point. People weren't excited about it anymore. And this could be a revival moment. And there's a lot of users. And by the way, for Salesforce, which has desperately been trying to enter this space and just been relatively unsuccessful through its own efforts, this could jettison it to relevance in collaboration in a pretty quick fashion, Pat. So it's really interesting. It's going to be a story to watch and probably something that we will talk about more on the show as this story develops.
Yeah, what I'll add is really from a competitive point of view. If you look at Slack and what it offers, typically when a startup comes in to a market, it needs to be 10x better than the entrenched vendors. And for a short period of time, I think that was the case. But the ferocity that Microsoft, Google, and Cisco came in with their offerings was head spinning. In fact, Microsoft beat Slack in terms of every major security consideration. And, for me, it was not game over because that's just too dramatic. Slack still does add some incremental value add, but man, it is definitely not the 10x I think it needed to make it happen. Where there's a case that I could make for Zoom before all the others caught up, just how easy it was. Now, it was a security and privacy nightmare, right, when they had their hockey stick growth. But man, it was easy, pretty good quality, really good quality on the whole. And for most users, it was free. So contrast in terms, and from a Salesforce point of view, they've been dabbling in this end user computing stuff. But this is where, if this happens, I would actually say, oh my gosh, it got serious. Now they're going to start going after Google and Microsoft for the personal computing space. And to me, trying to offer what Microsoft and Google are already offering, which is an end-to-end development platform that links into data, low code, no code, and a boatload of code type of tools. Actually, Salesforce doesn't have that yet, but still trying to connect the entire customer experience and employee experience front to back. Interesting stuff, Daniel.
Yeah, very interesting. So let's wrap up on this, Pat. I mean, we wanted to give a little preview. So it is almost December of what I would mark as one of the weirdest years ever. For some people, probably worst. For others, maybe being home and not traveling was great. I kind of found it in the middle. Very stressful. The elections, just all the negativity on social, the kids not being in school. But at the same time, from a tech standpoint, this year's been a bit of a boon. I mean, we've seen the tech companies have really carried the markets back, at least if you're in the investment markets. But to some extent, it basically kept businesses flowing. Connectivity, whether it was 5G, keeping the world connected through the deployments of 5G, LTE, and enhanced Wi-Fi's and different techs, for networking, it's security, or even, Pat, software that enabled people to work from home. And of course, we talked about PCs and devices, and boy, are we having some fun there. So there's been goods and bads there. But the last month is going to be loaded with events from some of the world's biggest companies, Pat. And I'll let you kick it off. But basically, long and short is, for you out there, there's going to be a lot more coming from us. There's going to be a lot more to talk about, because some of the biggest companies on the planet, their tech events are about to take off. And that means lots of announcements, lots of news, and lots of analysis coming from Pat and I here on the 6.5.
Yeah, so we have AWS reInvent Literally, if you look at what AWS does, they have this blowout event at the end of the year called Reinvent, and then they have these regional shows that go through the rest of the year. But I feel like literally all of AWS for 3 months is getting ready for this event, and they're the far and away leader in IaaS. They do a lot of PaaS, and they've been adding some SaaS products that connect the entire stack together. So I'm not going to talk about what I think's coming, because there might be some pre-briefings involved, but I'm looking for some big stuff. And then Cisco is Webex One. So for enterprises, Webex is still the leader, if not one of the leaders, in enterprise video and audio collaboration. And this is Cisco's once a year big event to come out with new products, new services. Because remember, Cisco does hardware and software and services. So I'm looking forward to everything that they're bringing out here. Why don't you take these ones, Daniel?
Yeah, I mean, there's a handful of others. Let's just run through them. So Intel's got its big multi-day analyst event. Intel's had a really turbulent year, some good moments, some bad moments, but we expect to get a little bit of insight to the future of the company. Look, don't count Intel out. For 20 years, it ripped and roared, and it's had a few challenges, but it's finding its footing. It's had new leadership. It's had new technology leadership. So I'm anxious to hear what the company has to say there. Qualcomm has its massive event that usually, Pat, would have had you and I in Maui for a long week of hearing all about its new mobile platforms. Well, Maui is going to have to come to us, thanks coronavirus, and we will be hearing all about what the company is doing there. Again, lots of pre-briefings, can't say much, but I expect it to be a very good event, and I expect the future of our mobile devices to continue to entertain and enable our productivity for much time to come. And then Marvell is having its big analyst day. The company's really ramped up, really found some solid footing. Its Inphi acquisition just a few weeks ago, Pat and I did a special edition of the show to cover that. Look, in the space of connecting data centers and edges and data centers, Marvell is ripping and roaring in automotive and enterprise and a lot of spaces. So company to watch in the future, and we'll hear more and have the chance to talk about that. And then finally, couldn't get it on the long banner list, but another upcoming collab platform called Pexip is having its big analyst day. And it's just another up-and-comer to watch, listed this year on the Oslo Stock Exchange in Norway. But this was a splinter of Cisco, of the Tamberg acquisition it made. So if you're kind of a collaboration peep, you would see and hear and know that the people that found this and built this know what they're doing and are building some really interesting technology for collaboration, Pat. So I think these are just the ones that came to mind. I mean, I'm telling you, I think there are more, and we'll cover them. But between this, we have Oracle's earnings coming up yet still. Splunk's earnings are coming up next week. HPE's earnings are coming up. So we got a lot to preview, and we're excited that the show for the remainder of this year is going to be really entertaining. And maybe as a final item, Pat's hair is growing. And from the last several episodes, as you can't see, Pat has moved to no longer touting the coolest hairstyle in the world, but you're just going to have to cope with that. There's going to be more hair here on the 6.5. But Pat, I'll let you bring it home unless you have anything else. We can close this baby down.
Yeah. So for Daniel and I want to say we're very thankful for you and all the support you've given us, and all the great comments. We're going into Thanksgiving here, and we really do appreciate you. If you do like what you've heard, if you could subscribe on YouTube, that would be great. If you have some suggestions for us or some topics you'd like to see us cover in the future, we'd love that too. And whether it's Twitter, Facebook, LinkedIn, or YouTube, you can comment us there. So with that, I'm going to take us out of here. Daniel, happy Thanksgiving, my friend. I hope you and your family are safe.